Good evening, Nick Inman from VolumeProfileTrader.com on Thursday, June 14th, and the S&P had a strong day today, made new highs today relative to yesterday, and really was an impressive day, especially when there were rumors about coordinated easing from central banks. So the market popped on that and really was good for a trade. But from there, at the end of the day, you're going into the weekend, and do you really want to be overexposed to the long side with Greek elections and I think the Fed meeting next week? So combining yesterday and today's, we opened with basically at the value area low from yesterday and traded higher immediately to the top of the yesterday's value area, where we then sold off and found support back at this 13-14 level. It was support in the morning once we got above there. It was support yesterday for a trade to the upside, actually two trades to the upside. And then we eventually had the report about the central planning, and we saw a huge spike on that. A 12-point rally followed by basically a 10-point pullback followed by a 10-point rally. So it was definitely volatile in the afternoon. Throughout the trading day, here I'll zoom in some so we can see. I completely missed this move right here. Caught this little pullback, rode it up for 4 points or so, and then it started to faded hard, traded back up, and then I sold, or I should say shorted somewhere in this 24 range. I think it was a little lower than that. Rode it down nearly. This was the VWAP down here. Good support, bounced it off, ended up closing the position off somewhere in this range once we found support for a second time down at these levels. And then the last trade I had was into the afternoon, or I should say into the close. Just bought the bottom of the channel, was really an easy one, and rode it up for a couple of points. But other than that, I have to be honest, I missed this move higher this morning. I just didn't have an entry. I did catch this little up move here, got chopped around a bit in the middle of this range. Overall, it was actually a slow day until the end, where you actually got some action. But then again, some of this, especially right in this area, was just nothing but light volume, not a lot of good entry bars. Okay, overall, we're still at this important resistance level. It's the value area high. Let me get off of fibs. It's the value area high for the month of June right now. That's not, it's proven really to be resistance twice already. If you count, this was an opportunity overnight basically to sell it, as we see in hindsight. But we're here again. Will this have enough to get above this 1330 level and push back up towards 1340? I have to be honest, it probably depends on the Greek election. And I was watching CNBC, which I rarely do, and John Najarian came out saying that there's a bunch of call buyers, huge blocks of call buying in the SPY. Whether they are right or not, we'll find out. But I think you stick with what you've been long, what you've been holding. Hopefully it's been working for you, and you kind of go from there. You don't really have to deviate away from what's working in your portfolio. And I know members, we have enough that is. We have a few trades on that are working and should continue to work. For example, Pepsi. Actually, this was one that I scaled out of some today, a little lower than the current price, but just continue to take off this position. I don't want to take it off completely, but this was one of my biggest positions, and now it's not, which is what I wanted. It was a safe haven. That's where I wanted to be. I got some capital appreciation off of it. It's like 4 or 5% gains, maybe a little more, but it wasn't anything significant. And now I can look to put that money elsewhere. I just want to go through the ETFs and kind of give you a broad-based analysis. XLF, I'm really surprised at how well this has held up. Bouncing off this huge high volume area, basically to the penny, and it's held higher prices since. Whether we can maintain this and push back up into this high volume area remains to be seen. But we're going to try, and we'll just have to wait and see if it works out. Energy, value area low looks like a good opportunity. I'm just going to point out some random names. ConocoPhillips continues to work. ExxonMobil, value area low, very nice bounce off of that level. You should go see 84, 85 in the near future. Chevron, value area low, bouncing right at the 50 and 200 now. Hard to say you can be a buyer at these levels, but your risk was defined. Well, I guess you could say your risk is defined right now with a stop under these, basically under 100. But at the same time, look at this. This is chop. You don't want to be buying high, selling low, buying high, selling low. Wait for it to resolve itself. Hopefully you'll get a better entry than this. And if anything, maybe you stick with the XLE. Maybe we get a push back up towards 70 or so. XLE, let's look at industrials. Trying to hold its own. Such light volume from these levels. Just heavy volume up at the top end of the range. So we'll see. But something to keep in mind. Utilities, keeps pushing up higher and higher. We're seeing multiple expansion. We're at the upper end of the 5-year range on utilities in terms of PE, but doesn't seem to matter. My favorite, American Electric, continues to work, so that's something that I continue to hold, really. XLK, technology in general, underperformance. You have to look at Apple in that one. Definitely an underperformer. And down on the day, I had a short call spread on Apple that I did take off at a little before the end of the day. Because I don't want... It's like a bird in the hand's worth, two in the bush sort of situation. I don't want to see, for example, if those call buyers who are very short-term buyers are right and the S&P does pop, another 20 points, I'm sure Apple will be up towards 580, which was the strike that I sold, the call strike. And I don't want that to come in my face, not when I have, decent profits on the table, take them off, live to trade another day sort of thing. Technology in general, pretty weak. Qualcomm got beat, value area low, value area high. It was resistance, big sell. Look for a potential double bottom around 55, and if so, maybe you can get involved at those levels, potentially. Metals trying to bottom here. You got a little double bottom, but will we see follow through? Volume's pretty light. So I'd recommend staying away from now. Not much, in my opinion, to do there. Materials, bounce off value area low. You got a little double bottom. Now we have consolidation. You have moving averages pointing down, so that's not very positive. But if we do break above these highs, we should see a decent move to the upside, maybe 6 to 8%, which of course isn't that bad of a move. Gold. I'm looking at that point of control level, 1635. No, it's higher than 1635. 1645 or so. That's kind of my bogey. I think you want to be involved in the gold market to the long side, but at the same time, don't kill yourself trying to be long. Wait for it to basically tell you, it's right to be long and then go ahead and add to your position. But for now, I don't really see the need to, unless if you do get the central bank basically money printing. Silver consolidating, not doing much. Crude, I think you're getting your opportunity for a bounce back here, probably up to the value area low, say $90 or so, and maybe the shorts come back in. But one thing I think that is important, of course, this isn't accurate at all because we've had contract rollover, but you have point of control down here, so you do have some strong volume. Now remember, when we're in rollover period for futures contracts, prior volume in that contract, when it's not the front month contract, is going to be light. So this volume is a little off. Still can use it as targets. For example, the first one, well, you have swing highs in this 86, 87 level, but you'd be looking about value area low, $90 or so for a potential target in crude. I don't show these much, but 30-year Treasury continues to be strong. Sure, we're consolidating, but I don't really have much an opinion other than shorting it has not been the right trade. 10-year, similar scenario. Shorting has not been the trade. We're consolidating. Wouldn't be surprised to see lower yields, but that's just the way it's rolling right now. 6E, the euro continues its bounce back, light volume. Surprisingly, the M contract, the June contract, volume's still there versus September, so you're not seeing the full effect. But nevertheless, you're getting short covering in the euro into the Greek election. That's something to be aware of, and maybe it correlates to the market stabilizing, trying to push higher. The dollar fading away from these highs, and basically we have a decent sized selling tail here, looking for lower prices on the dollar around these current lows, 81 or so. 81.50, 81.70. Around those levels, you'd be looking for some type of bounce. Other than that, I wouldn't put too much into it. But you never know, this could be like a little blow off top, and we could see a lower dollar back in the 80 to 79 range, which would probably be market positive. So really, that's all I have to say. Not too much going on. We'll have our opportunity after the Greek election, especially when the Fed speaks next week. But for now, stick with a neutral portfolio. You don't want to be too long or too short going into the weekend. With the expiration tomorrow, you'll probably see some decent volatility for day traders, and for swing traders, just look to square off your books, take some risk off if you need to, and look forward to the next week. So take care, have a good night, talk to you tomorrow.